Hello and welcome. Today we shall be taking a look at the UK's number one stockbroker, Hargreaves Lansdown PLC. The company has a market capital of £9 billion and is currently ranked 41st in the UK FTSE 100 index. In the financial year to June 2018, Hargreaves Lansdown had a turnover of £448 million and a profit margin before tax of £292 million, which gave it a margin of 65%. It currently pays an annual dividend yield of 2.1%, which is paid semi-annually in March and October. This dividend is covered 1.23 times by the earnings per share. The company was founded in July 1981 by Peter Hargreaves and Stephen Lansdown. The company was floated on the London Stock Exchange in May 2007. The current CEO, Chris Hill, was appointed CEO in September 2017 after joining Hargreaves Lansdown in February 2016 as Chief Financial Officer from IG Group. Hargreaves Lansdown was formed initially to provide information to clients on unit trusts and tax planning matters. The company has grown to be the UK's largest direct-to-investor investment service, employing over 1,100 people. The company was floated on the London Stock Exchange in May 2007 with a share price of 162 pence. Hargreaves Lansdown is UK's number one stockbroker with over 1 million clients and over 30% of the market share. It offers a full range of services including ISAs, of which it has over 770,000 accounts, lifetime ISAs, over 42,000 clients, junior ISAs, of which it has over 92,000 accounts, as well as corporate schemes and SIPPs. For the previous 5 years, Hargreaves Lansdown has had a consistent revenue of between £358 and £448 million and a gross profit margin ranging from 50.4% to 68.9%, which gave it an average of 60%. It has the 7th highest profit margin and the 2nd highest return of assets in the FTSE 100 index. The forecast for next year is a revenue of around £500 million and a margin of 65%. With the generated earnings for the previous 5 years of between 33 pence and 49 pence per share, the dividend has always been covered by at least 1.23 times the earnings per share. Hargreaves Lansdown has a share price beta of the same volatility as the FTSE 100. The share price standard deviation for 2018 was 176 compared to 348 for the FTSE 100. The current share price is 41.8% above the 52-week low. Whilst the trading statement in May was well received by the market, the following final annual results published in August were not. The weak investor sentiment due to the volatility and general decline of the markets, the forecast for Hargreaves Lansdown is a slowdown in net retail flows. This was confirmed in October with a trading statement of a 13% decline year-on-year of net new business due to market uncertainty and weak investor sentiment. In the months following the trading statement, the share price fell 17%. Hargreaves Lansdown has one of the highest profit margins and free cash flows of the FTSE 100. There is competition in the sector, including recently floated AJ Bell, but Hargreaves Lansdown remains the largest. They also offer their own very popular open-ended investment funds. Even with the recent share sell-off, Hargreaves Lansdown still has a high price-earnings ratio of 38.7 compared to the FTSE 100 average of 11.4 and an annual dividend yield of 2.1% compared to the FTSE 100 average of 4.48%. The dividend is covered 1.2 times by earnings per share. For these reasons, I have given Hargreaves Lansdown an overall average of 4.3 out of 5. Thank you for watching. Please leave comments below. And also like and subscribe for further analysis of UK company businesses.